Good morning, everyone. Welcome to our Friday morning trading session. And we'll take a look here what's going on with the NASDAQ this morning. Kind of a funny sort of day. I think there's something. Oh no, crude oil is moving. I'm looking at my crude oil chart and it's not ticking. I'm thinking, is something wrong with my crude oil chart? No, it's ticking. It's just very, very slow. All right, let's take a look here. What's going on with crude oil here in the overnight? We'll take a look at the Eagle, and it looks as though we had a little bit of a dip in the action. So the market fell off a little bit yesterday. Kind of seesawing back and forth, but overall pretty much a bearish day for the NQ. And here we are with the overnight very, very choppy, and then kind of resuming that downtrend. So it does look like the NQ may be in for a little bit more pressure to the downside. We'll see how things shape out this morning. This is going to be a little bit of an opening gap above the market. And it's also starting to look a little bit to me like perhaps they're working themselves into a little bit of a sideways range here. Gold also kind of moving sideways. I said I was going to be a little bit more attentive to gold. Here's gold on the Falcon. And gold actually had a little bit more of a rally day yesterday, and you can see even through the overnight, I'm not going to scroll all the way back to yesterday, but gold opened North America right here, and you can see a lot of bars unfolded. Look at the timestamps on these. So this all just flew onto your chart in a matter of seconds, and then kind of gave us a little bit of time here. Things settled down and took about 3 or 4 minutes for this trend change signal to develop. So couldn't have done a whole lot with that. Obviously, some sort of news influenced the market right out of the gate with a flood of orders. And then we had a chance to pick up a nice little trend change signal if I were awake for that. And here we are. So the market's kind of flip-flopping a little bit, also in a rather enlarged trading range at the moment. See how we are right there? So crude looking, or pardon me, gold looking bullish, the NASDAQ looking bearish, and last but not least, let's take a look here at crude oil, which after a little bit of a move up yesterday, has been in a little bit of a nosedive also. So crude oil continuing to look bearish also. So let's see what gives from there. All right, so the NQ now making that little bit of a move up, trying to get into that opening gap, I suppose. And we'll have to give them a couple of minutes here, I suppose, to settle in. I was fighting with my Windows 10 on my laptop computer. Oh my goodness, I hate that program. Why they didn't stop with Windows 7. It's automatically updating itself, and which is fine. Normally I turn off the updates because some of the Windows updates conflict with some of the programs I have on my computer. But it's not that part that bothers me so much. What bothers me is that every time it updates, it changes the way the computer looks and the way the computer works. So Windows 10 used to allow you to choose your desktop style. No, not anymore. I don't know if I'm unique in this, if they're just picking on me, or if it's everybody's computer that they're messing with, because I am not impressed, not one bit. I only bought a Windows machine because, again, some of the software I run is only Windows compatible, but I think next time out it's going to be an Apple computer, or I'm going to polish up my Linux and get more familiar with that. Okay. Yeah, Tony says I must have shorted Microsoft. They're taking it out on me. But I searched the internet and it almost looks like I'm the only one who is plagued with this issue. All right, so here we go. We're getting a first micro macro cross lower here. And technically, I suppose that is kind of sort of in trend. All right, well, I was thinking about taking that signal, but now we're into yellow bars there, so we'll throw that one away. We are getting a trend change signal here on the Falcon, and it looks like it's going to develop right here at our primary support. So if that fails here at the primary support, that may be a good spot to short this market. Can I cover it above the high? Oh, look at that. The signal's probably going to print early, so there it is. There's the signal. Nope, stop that. I am going to end up having to take it down there. All right, I'll just leave it below the primary. Mo asks, Eric, do you ever trade the 30-year bond? I do. I haven't looked at it for a while. I can certainly bring it up if you'd like to see it. With the 30-year bond, we need to really adjust our brick size because of the nature of the market and the tick value. So we're running a very small brick, actually a 2-tick hawk and 4 ticks everywhere else. You see, the reason I try to get my entry on my hash mark, you can see it here on the Eagle and on the Raptor. I wanted to try to get out before we encountered the low of the day, where the buyers started their rally from. That does give us an opportunity here in the hawk, however. Oops, waited a little bit too long. All right, well, there was a nice little first micro macro cross here in the hawk, and the reason it was a nice little first micro macro cross is precisely because we were at the low of the day. So we knew that if this signal printed, if this order got filled, we would be engaging a lot of those buyers' stop loss orders, which would help spur the market down. And look at that, that's exactly what happened. And I wanted to get back to my Falcon trade and get rid of that buy order, again, for the same reason. If the market broke those lows, and look at that, look at all that volume on that bar, we would be tripping a bunch of buyers' sell stops, and down they go. But it was a good trade all the same. All right, Mo, hang on here a second. I will throw the 30-year bond on another chart. I used to, well, I used to trade the bond, and I was a very tight scalper on the bond. I'd only be looking for 2 or 3 ticks because, of course, at $30 a tick, $31.25, it doesn't take too long to make some money. And I was also using the bond kind of as a gauge. And what I mean by that is, here's the bond on the hawk while we wait for the other markets to load. If the bonds on the stock market have an inverse relationship, so I would use the bonds to kind of gauge what was going on in the stock market. If I saw the bonds rally, I would know that the move in the stock market was valid if it was going down, as we're seeing this morning. I would know that the move in the stock market was valid, and it would be okay to stay with it. If, however, the bonds were going the opposite direction or not moving at all, then that was usually an indication that something was up. They say the bond traders are the smartest traders in the world, and I believe it. $31.25 a tick. You can't afford to be wrong all that often. So we'll change our hawk brick down to 2. And I'll adjust the others, and then we can see what the 30-year bond looks like. So the seller's kind of taking profit now, I think, as we see the buyers coming back. All right, so here's the 30-year bond. And like I said, we really have to go with a smaller brick size. So I've only got 2 ticks on the hawk, 4 ticks on the falcon, and 4 ticks on the eagle. And of course, 4 ticks on the raptor also. But you can see the signals still valid. Here's a very nice little first micro macro cross. Here's a first micro macro cross which did not fill, but again, you want to take the context into account, right? You don't want to get too crazy with your signals, because at 2 bricks or a 2 tick brick, you are going to start producing more signals. Little first micro macro cross lower, little first micro macro cross higher. And then of course, look at that beautiful trend. Hey, that's worth a few dollars there, that one. 4 arrow consolidation right through here, macro pullback, another macro pullback with good follow through. These of course on the hawk. We'll take a look here now at the falcon. And trend change signal down here, also a late filter entry, came very, very late. I would still take the signal because it is a high probability signal, but I would be very anxious about this signal. As soon as this bar formed right here, I would be pulling in my stops. Certainly after this bar formed, if I didn't already bring my stops in on this one, I would bring my stops in on this one. Another trend change signal here to the upside. And of course, with the bonds at $31.25 a tick, you can certainly double your profit objectives, because here with the Falcon, our high probability target is only $100, so that's only 3 ticks. So you could shoot for 5 or 6. Here's a trend change that never triggered. I'm surprised we didn't get a double dot up here. That would have been a nice double dot reversal. And you can see a lot of these go much further than just 4 or 5 ticks also. A nice trend change signal down here, you'd have to, pardon me, be alert for it. If not, you had the other trend line touch signal right here. So you can see the signal's all very valid, regardless really of the instrument that you're watching. And let's bring over the eagle also. And the eagle kind of showing us the same thing, very choppy right now. And let's see what's going on with the stock market. So the NQ trying to rally a little bit, and you can see here the bonds not moving, not at all. There we go. The bond's ticking down, which is what we would expect if you're going to see the stock market rally. But they're not moving. So that makes me think that the rally that's in the stock market right now might be short-lived. And certainly still very, very sideways for the most part today. And yesterday put in a very nice rally day, as you would anticipate when the stock market is heading lower. And if you bear with me here a moment, I'll build a Raptor chart, and you can see it on the Raptor also. Almost looks as though they're trying to get into that gap still. So here's the Raptor. Look at the volume on the bid and ask. It's certainly as big as the S&P, among others. And as far as signals go, this is a 4-tick brick. I think I'd have to scale down some of the settings here. So we'll change that, and we'll change our cloud. No, I'll leave the cloud for now. There we go. So a hard edge bounce, a double pullback, produced a buy signal here. The Raptor actually fairly quiet for the most part there. A trend change signal right here, and then the soft edge. Did we get a decent soft edge buy? Actually, we got a soft edge buy way down here. You'd have to be alert for this one though. A tiny little test of the extreme, a little retest of the low and the failure, which is what we'd like to see. And then huge move up. Huge move up. The 10-year note is a good one too. It moves rather slow. But if you're liking those financials, it's certainly one to consider. Ah, thanks, Jim. Jim reminded me it's option expiration today. So that could add some volatility, and the advanced decline numbers. So we've got just under 700 on the buy and just over 2,000 on the sell. But again, we have a little bit of an opening gap to the downside, so some of those numbers are going to be skewed. Well, here they go. Pardon me. Gold is a little bit of a meter that way as well as the 30-year bond relative to the stock market. If gold is going down, pardon me, normally you anticipate the stock market will rally. And Crude oil too, but not as much of late. Crude is kind of back to doing its own thing. Which right now is nothing. Alrighty, nice little late filter entry signal while we were looking around right here on the Falcon. Also coincided with our trend change signal here on the Raptor. Nice little cloud crossover, early trend change. And now we're going to look for that support to come out of this cloud. Seller's going to show up here sometime. Especially as we get back to the top end of the trading range, or this morning's trading range, I should say. We'll see if we get a macro pullback signal here on the Hawk, or perhaps a 4-arrow consolidation. And the Eagle also crossing over. I was going to say we didn't get a real good test of the extreme, but now I know why. I forgot the Eagle is in this bigger ranging market. I don't really want to buy at the top end of this range for what should be obvious reasons, namely the market stalling out there. If we come through here now and we do one of these, where we make a little bit of a swing to the downside and then the market starts to go back, that would be worth buying, even if the signal is near the top, because this little swing right through here would show us that the buyers are getting a lot more serious about picking up the pace and pushing the market higher. Right now we're just kind of hanging out. All right, 1, 2, 3. This is a very sloppy 4-arrow consolidation that we have, but okay, I'll take it above the high. So we have 1, 2, 3. This is going to be signal number 4. It's going to try to print here. It's kind of a sideways, wishy-washy 4-arrow consolidation. I normally like to see the 4-arrow consolidations have a little bit more, this kind of shape to them. Kind of that bull flag flavor. And then you get 1, 2, 3, 4 signals, and then we go off of the 4th signal. It's also moving into a macro pullback, which allows me to get a slightly better entry. And we'll see now whether they can do anything with that. Get up there just a little bit. Again, we're near the top end of this trading range. That's why I'm considering the scalper versus the other tools, because I think I can scalp out here with a profit. There we go. So I managed to scalp out with a profit, and we also saw the market break the high of the day. And it looks like, according to the range I drew here on the Eagle, we're into the high of the overnight now, or the pre-market. Okay, a couple good trades though. See, now we're getting that reaction just after we broke out through the top end. Now the sellers are piling on, trying to force the market back down. We want to be a little bit on the choosy side. All right, so we got a red bar buy, which typically develops toward the end of the trend. We might see the sellers actually try to take the market back here for a little bit. Now the red bar buy, of course you can buy it to go with the trend like this. It is a scalp, or you can set up to sell the failure of it, in which case I would probably run the stops up here. Or you can just use it as an early warning that the trend might be turning over. It is a weaker signal, but I can't help but think we're going to see the sellers try to step in here just a little bit and see if they can't take the buyers out. There we go. Because don't forget the overall context of the day, right? We had a big move down, or actually I should draw it a little differently. Here's the context of the day. We started like this, and now we've made a bigger move here, and you know, we had a big move down. It's reasonable to assume the sellers are not going to give it up entirely, especially when you consider the trend of the last few days has been bearish as well. And so there's a lot of bearish pressure here on the market right now. So a little bit of a battle going on to see who's actually got control of this market now, the buyers or the sellers. Had a nice little trend change signal here on the Falcon. don't know if we're to our profit objective there yet, or if we're sitting on that primary support line. And they're just about to kiss the profit target. We'd have our trade at break even. Yes, we would. And they're kissing it. They touched it. Oh, come on. And there we go. They finally broke through it enough to hit our profit objective. Now this signal here, it is a valid signal, but we're producing it away from the trend line a little bit. You see how we have that gap versus the trend line touch signal where we actually got closer to the trend line. Now when you're looking at a trend line touch versus a gapping signal like this, don't micromanage it. If it looks like it got close to the trend line, that's good enough. The thing about this signal here, though, is that while the signal is valid, there is a very real possibility that the market's going to try to pull back into this trend line. Therefore, I need to keep my stop a little bit further back, certainly as far back as I can afford, which looks like it's going to be somewhere around there, in anticipation that if I do get filled here, the market may choose to hop around a little bit. And that should make sense because we haven't seen a test of the highs, have we? We haven't seen that test of the extreme and then the failure. That all important test of the extreme. A lot of volume coming in on these bars too, it seems like, where we're at right now. And here on the Eagle, so we've tested the top edge. Remember, I said we're going to look for the market to retreat a little bit. We're going to look for the buyers to pick up the market early. And if they do that, then we may choose to become a little bit more bullish. But right now, we're still in that range. Well done, Jim. Jim says he shorted the YM, picked up 21 ticks. Nothing wrong with that. Let's see, now everything is starting to change its look again. We're getting a little bit of cloud crossover. I'm not real happy about this plethora of signals. I don't like to see the market go, signal, move, signal, 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 signal. I want to see signal, move, signal, move. Then it has some flow to it. Signal, move, right? When you see a bunch of signals printing, look at what happens. This is kind of where we are right now. This is almost a mirror image of where we are right now. NQ has made a move lower, and now look at we're printing signal after signal after signal. And what happened then? We had the reversal. We'll see if it plays out that way this time also. Now, regarding the buyers coming back and picking up the market early, I think they've drifted a little bit too deep here. The buyers needed to pick it up, about halfway or something like that. This isn't an exact science, but if they're going to be serious, they're not going to let it drift all the way down here. And that's because, through this range right about here and through this range right about here, if the market's in a trading range, this is where the sellers are going to get serious about selling. This is where the buyers are going to get serious about buying. See, they bought it here, they bought it here, looks like they're buying it here. Sellers sold it here, they sold it here, they may try to sell it here again. You guys were asking me about shorting a market that's in a range. Well, here's an opportunity where you could do that. So we would look at a limit order, and now you pretty much just choose where do you want to short from. Do you want to short from 41.46? Try to keep your stop far back as you can. And I would probably suggest, going in a little bit lighter. So we go 41.46 to 56, and we would look to pick up a little bit of a move here. Just going to see how they are relative to that line. Oh, see, they're coming up a little bit early, so it's actually looking like the sellers may be the more aggressive ones here at this point. This is the problem when you are trying to short the high and the low, or trying to short the high, trying to buy the low of a trading range, is when the buyers or sellers become more aggressive, you will take a hit. You will get stopped out for a hit. Personally, I think we're gonna see them, make a run here at the highs and then maybe give it up. Tony says, hey Jim, will you trade my account? Yeah, Tony says, nice little move off of the green bar sell on the Eagle here. This would have been difficult to take. And let me get rid of this here for a sec. The green bar sell is always easier to take when the market has an established trend, as we do here. We anticipate the pullback, that's nothing new, hits the hard edge, produces a green bar sell, you can short it, took a little bit of heat, came back with another signal, and then had the follow through. Compare that with what we're looking at here. What is our trend? Well, I had a fellow tell me, if you don't know what the trend is, you don't have a trend. You're in a trading range. The problem is green bar sell here, red bar buy here. Right? The red bar buy is also a very strong signal on the Eagle. But because we're trendless now, the signals lose their potency. All right, so we're getting a little bit of a trend change signal here and a cloud crossover on the Raptor. I'm going to set this up. Oh, and the signal tripped, and they're going to bring me in right there. we'll see here. Whether they're going to be able to get back up to this high of the day at around 41.48.5. Now they're retreating from that whole area right now, looking for that support coming out of the cloud. All right, so we are long and looking to get to that top end. Of this trading range. And now everybody fell asleep. So the Geiger counter was pulling here to the downside a little bit, which, it's not unusual, but as sellers try to defend this little resistance area, but I would really like to see this pull back the other way now. Kind of even out the needle. There we go. We're evening it out a little bit. Oh, that wasn't good. I'm not liking that. The way it pulls and holds and holds. Come on, you buyers. There we go. Start chewing through some of those orders. Come on. See, there come the sellers again. Get over there, you buyers. You sons of buyers, get up there. So there was that little bulk of selling right through here. See that little island of selling? Aye. There they are jamming getting stuck on the short side. There we go. That's what I want to see. I want to see the market pull over and just chew through those buy orders. Wow. What a battle at this price level. So if we see them take 41.44, well, I guess technically 41.44 quarter is what we need to see. We're going to see the market head higher. If, however, 41.44 continues to hold, we're going to see them push lower. And I do not want to roll my stop just yet. There we go. 41.44 quarter. There we go. We're through the mess now. Trying to take out some of those exit orders that were just above here from everybody selling. See, they were loading up here. All right, we'll leave this alone here for a sec. Mo's got a question. Eric, is the color change in the micro line a possible first indicator, either bullish or bearish? So if you're referring to this here, This is actually our macro pullback signal, Mo. And I'll show it to you here on the cheat sheet. And if you don't have the cheat sheet yet, please, by all means, write me and ask me for one. Where did I put it? There it is. All right, so here's the macro pullback signal, and it occurs when the micro line goes out of sync, but everything else stays in sync. So it's actually a with trend signal. It's not a counter trend signal. We have one here. We have one here. This one occurred after the 4-arrow consolidation, but it's also a macro pullback. Typically, we only see 2 macro pullbacks within a trend. Sometimes we'll see 3. When we start seeing 4 and 5, I get very suspicious. All right, I think I need to do something here with my Raptor trade because we've got quite a bit of open profit, and I'm going to go with the parabolics, and I can't do that because the parabolics are counter, so I'm going to go right below the low of this bar. That's all I'm going to let them have. So it looks like the day has become a lot more bullish. And look at this run up through here. Did you see where it really ignited? Right here at the high of the day, the high of the morning. Why is that? Well, the same reason it picked up steam here. Because all of a sudden, all these sellers who sold back here, guess where their stops are? And, you know, they've got a mountain of stops here. Just tons of stops, which is evident because of this rather pronounced rally. I think they're going to tag me here in a second. And this was all those buy stops, which were exit orders, that got tripped. You see, there was no selling to counteract it. It was just all the sellers getting stopped out of their positions and all the sellers that were trying to sell limit orders here. And here, this is why it was taking a while to get going. They were all there with their limit order saying, hey, we're in a trading range. Let's short the top end of the trading range. And boom! Oh, that's a good idea, Tony. Tony says he took his cheat sheet down to Staples on his iPhone and they downloaded it and printed it on photo paper. He says, wow, it was worth the $2. It looks, I'm sure it looks pretty smart. He's probably got it framed in his living room beside his picture of his kids and his wedding photo. I've also got the Falcon cheat sheet. No, I'm sorry, I haven't done one for the Eagle yet or the Raptor. But we go over them every day in the room, folks. I have to wait for the day where I can get all the signals on one screen. All right, I think I can go back with the parabolic strategy now. And we'll accept that. There we go. So we were able to ride out that little bit of a swing. And let's see if we can actually get higher here. I was going to say we could get to 4160, but I didn't think anybody would believe me. There we are at 4160. Where's my next line on the support and resistance suite? Is going to be 4166. So that's going to be primary resistance. We can probably expect it to give us a little bit of grief at that point. Overall, though, we're having a pretty good morning, and it looks like now the Raptor is going to reverse and take us out of our trailing position there. Still a pretty good little trade. I'm curious, I'm going to make a note here on my journal. If I had left my stop below there, would I have done better? So far it's holding. Nope. No, they just kissed it. All right, so not a bad day. What have we gone? 4 for 4? So that would be my day. You know, I wouldn't press my luck. We've got 4 winning trades. There will be other opportunities today. I think we're going to see a little bit of a reaction now, as a matter of fact, to this recent run up. Once again, you got to consider the context of the day. I do believe the day to be bullish, but I don't think the sellers are just going to walk away. Right? We had this big run up after a big run down, which was preceded by a big run up, which followed a big run down. The buyer is definitely stronger, but that doesn't mean that the sellers aren't going to try to sell. If you're a seller, this is a good price to short from. You haven't seen, well, I guess 4160 was a pretty popular number yesterday, but we certainly haven't seen these prices for several hours. Okay, a couple questions here. Curtis is asking, what's the green line on the Falcon? Okay, if you're looking at this one here, it may look green on your chart. It's actually gold. This is part of the support and resistance suite, right? And it's an add-on indicator. Oh, well, maybe it's this green line up here. Sorry. The support and resistance suite are 21 support and resistance lines, which are forecast for this trading day. The gold line is the median line. It's kind of a reference point, just kind of tells you you're in the middle of the trading range. The blue line above is primary resistance. Blue line below is primary support. And then we've got secondary resistance lines above and secondary support lines below. Kai asked, what are the support and resistance lines based on? A very complicated algorithm. And I'm not fibbing when I say that. It took me, I guess, about 4 months, 5 months of number crunching. They're actually based on previous price action. So it looks at what the market has been doing, and then it projects what the market will do. So it looks at where the market found support and resistance in the past, and then it forecasts that into the future. It's based primarily on price. Well, yeah, actually, it's based entirely on price, come to think of it. Oh, nice little, yeah, James says he's a sniper. A nice little scalp. Jim says, shorted the YM at 25, picked up another 12 ticks on 2 contracts. I'm not surprised, David. David says, my broker told me yesterday they're going to start charging $80 for the Russell data feed. I haven't heard that yet. I actually don't subscribe to the Russell because of that. It's just one more fee for me to incur. And really, to me, a stock index is a stock index. Yes, the Russell is great. If that's the one that floats your boat, then by all means, trade the Russell. But, do you need to follow the NASDAQ, the YM, the Russell, the E-mini, and the mid-cap? No. Pick one or two. Those are plenty to start with. And then as you go on, you can get more serious about perhaps adding another one. But as you've seen, the key is not finding more signals or trading more markets. Or I hope, as you've seen, that's the key. The key is to find a decent signal and then capitalize on it. Even if you just get in there with a onesie, do something. Yeah, David says he thinks it starts April 15th. Like I said, I haven't heard, but I don't have the Russell feed. So I do know they're moving the Russell over to the CME, but I forget when they're doing that or if they've even done that already. Kai asks, are you paying attention to the market sentiment of weak markets versus strong markets? No, not so much. And again, this is just me, right? If folks, at the end of the day, it's your money. Just because I do something one way, that's what I'm comfortable with. If you're comfortable doing something else, then by all means, do that. But personally, I just concentrate on the one market. I tend to favor the NASDAQ because of the tick size. If I were to do more scalping, just entirely scalping, I would probably focus on a market like the E-mini or maybe the Russell, because at the higher tick value, if I'm only looking to scalp, I could, possibly earn a little bit more money. But I love the flexibility of the NASDAQ. I love the flexibility of the YM. I think it's great being able to trade for $5 a tick. You can see the moves are decent moves. There's decent volatility. I'm very happy with the NASDAQ. But as for comparing weak markets to strong markets, no, I don't really bother with that. I just try to concentrate on the market that I'm following. And for those of you who haven't heard my how I got onto the NASDAQ, when I was hosting the trading room years ago, I was concentrating mostly on the YM and the E-mini. I forget what else I was watching at the time. And there's a little old lady in Florida, stereotypical little old lady in Florida. And she was trading the NASDAQ lights out. She'd be posting, yeah, Eric just made 500 in the NQ today. Oh, I had a really good day. Took $1,000 out of the NQ. And it was forever since I looked at the NASDAQ. And I thought, I'd better give the NASDAQ a second look. And I started following it again, kind of on my other monitor, just kind of looking at it. And I was very impressed with the moves, very impressed with the follow through, the volatility, and of course, $5 a tick. How can you beat it? So that's why I kind of got onto the NQ again. And honestly, I'm very happy with how it moves. You need to, choose a market that's you're comfortable with. If it's the E-mini or crude or gold or Russell or soybeans or whatever, get comfortable with it. Learn how it moves, because really they all have their own little personalities. Yeah, like Jim says, you got to understand the characteristics of each market. That doesn't mean the signals change. No, not at all. But that does mean that you kind of get a feel for the ebb and flow of things. Sometimes you can't always put a finger on it, but you know it's there, right? Like I've been expressing to you with the NQ this morning. We had the big move down, bigger move up. Big move down, bigger move up. So I'm fully expecting another move down, at least a little bit of a move down. I can't believe that the sellers are going to walk away now. But am I going to get crazy on the short side? No. Do I expect the market to make a full-blown race to the lows? No. If anything, I think we're going to see the NQ continue to move higher today. I think it's very much a buyer's day, a bull market today. And here we come with the Raptor. We're kind of at the top end of the range here. We have produced a hard edge bounce. It's not one of these signals that gives me a warm, fuzzy feeling, but it does look like the Raptor may try to press on higher. And again, I've already reached my limit for the day, but we'll follow this through, and now we'll see. Here's the challenge, though, right? We don't know at this point whether the market's going to develop into a trading range and move lower, or if it's actually going to break out and move higher. You see how the sellers are starting to pile on? Those are people anticipating a trading range. This signal right here off of the hard edge, this was the better signal because you're not buying right into the top end. We did have this little bit of a swing, though, which suggests to me that maybe the buyers are a little bit stronger. And there they go. The buyers start to chew through the orders. Chew, chew, chew. Come on, get up there. Oh, I guess I better go to stop and play. There we go. Hit our break even. And roll this trade up to break even. And we could either pop out with profit now, because we've got probably 50, 60 bucks on the table there, or we can just see if it can do something with that. If we can still see the buyers follow through and perhaps push it to that 41.70 area. Right now we're into the primary resistance here at 41.66, hence the hesitation. But, this is the kind of situation, too, when you have a bullish day, you're always going to be better off buying than selling. Sometimes even just arbitrarily buying. I think we did that one day where the day was obviously bullish and we just bought and just left the trade alone, and we had a very desirable result at the end of the day. Come on, get up there. Get up there. I'll give you a little push with the mouse, a little tickle. Get up there, come on. The advanced decline number's still bearish. They're gaining. If you're watching advanced decline, things are relative to each other, right? So if it started at 200 and now it's at 900, that's kind of bullish. Kai asked a great question. How can you tell if it's a bullish day? Well, again, you kind of look at the whole context of things. So where did we begin? We began the day right here. Big move up. Big move down. Big move up. And right now I'm thinking, trading range. Big move down. bigger move up. Now we're bullish. When this happened, when we breached the top end of the trading range, because at this point we were still in a trading range, when we breached the top end of the trading range, then we officially became bullish. And look at what happened. We came down, we retested the top end of the range, and the buyers maintained control. How long will the market stay bullish? Anybody? I'll give you a chance to type because I'm sure some of you are hunt and peck typists. When will the market become bearish? When will it become a bear market? That's right. Tony's got it. Tony says, until it changes. How did we determine it was bullish, everyone? When it took out the high. When will it become bearish? When it takes out the low. When it takes out the low and then we will anticipate it will also make a lower swing high. Then the market will be bearish until it proves otherwise. If the market goes from here and takes out the high again, then all of a sudden we're thinking, maybe the market will be more bullish. But always, always remember that the market can also go sideways, right? It can also be trendless. That's why I said to you, a trading friend of mine said, if you look at a chart and you can't tell, if you're looking at this chart and you can't tell if it is bullish or bearish, you're in a trading range. Now this one to me looks a little bit bullish. You know, chart starts here, goes up here. And will it turn bearish because it breaks 41.50 by a tick? Will it become bearish because it goes 41.49 3/4? No. No, we need to see it. It will break, it will retest, and then this will determine whether it stays bearish or whether the buyers take the market back. And if the buyers take the market back and it fails up here, then I'm thinking, oh, trading range. So next time it comes down here, if you're inclined, you may choose to try to buy and maybe scalp out a little bit, thinking that the market may bounce around somewhat. I'm not trying to second guess what the market is doing per se, but I am aware of what it is doing. So I hope that makes sense. This is why traders also follow trend lines, right? They'll shoot a trend line across the highs here. You could probably even transfer that to the lows. And they'll just look for areas where they're anticipating the market to find support or resistance. So long as the market stays within this kind of a sideways general upwards progression, they'll continue to buy when the market gets down here, and they'll continue to sell when the market gets up here. That's just what traders do. Now, because I would be more bullish than bearish, I would be looking for, some sort of buying opportunity. I could see this market drift down, challenge the lows, maybe get into a red bar buy scenario. It would be worth a buy, right? Because we already know there's support down here. This whole region right through here. See, this is where the sellers failed and the buyers dug in, and then the buyers dug in again. You think if prices get down here that the buyers aren't going to try to buy it again at 41.50? Of course they will. I bet you if you had the dome data with the two layers on it, you would see a monster um, amount of orders sitting right here, this whole 4150 area. They would just be loaded in anticipation that the market's going to find some support there. And why wouldn't they? I know I am. I'm anticipating the market to find some support there. Am I going to buy with a limit? No. Well, here we can, we can play around. We're in the demo room after all. So let's say we're going to buy the hard edge. I'll buy 41.52 and we'll risk it down to here. And let's see if they drift low enough here. Kai's asking, so you determine a bullish day only by market structure and Dow theory? Well, pretty much. At the end of the day, the price is the only thing that's real on your chart, right? All the DTS stuff, if you were watching stochastics or Bollinger Bands or everything, those are all mathematical derivatives of what price is doing. And they're trying to give you a different way of seeing price and hopefully, generate a correct buy or sell response. But price is price. It's always going to do what price will do. And I think it's easier to determine a bullish day by looking at how price is reacting. You can just use the DTS system though, and you can say, okay, well, the Eagle band is bullish. We've had a breakout above the high. The band is bullish. If you want to keep it simple, that's the easiest way to determine what your bias on the day is. But it's very important that you take out the high or the low, whatever the case may be. So in this case, this swing high here was muy importante, and this one right here is also going to be very important. And they happen at the exact same price level. Now the buyer's getting a little bit aggressive a little earlier, which again tends to have a little bit more of a bullish flavor to it, but that may be temporary. Yeah, like Jim says, he finds that price action and the equivolume bars are key to determining where the buyers and sellers are. So what Jim's referring to is like right here, we know there was massive buying going on right here because of the width of the bar. We know there's a lot of selling going on up here and more buying down here, again, because of the width of the bars. See, look at this. The buyer's defending a little bit early, hoping to resume the uptrend, and so far the seller's not having anything of it. We'll see whether they are able to press the market a little bit lower, get our buy signal. See, we're anxious like a lot of buyers too. See, a lot of buyers were anxious to buy here. They were prepared to buy at 41.55, so they wouldn't be left out. We're thinking maybe 41.52 is a better place to buy, but the market could realistically drift all the way to 41.45. How can I say that? Well, I'm just kind of eyeballing the trend line, this trend channel that I've drawn. You got to know that there's going to be buyers with orders here at 41.45 hoping to get even a better price. Jim says that's where he would buy at, 41.45. Kai asks, the thickness of the bars shows the difference between the bid and ask or the volume. No, it shows the volume on the bar. It's just a very simple, you can also throw volume on your chart, of course. It's just an easy way to interpret volume. Oh, we may have been a tick too late. Oh, look at that. They may leave us hanging there. They got down to, what did they see here? 41.53 quarter. But that's how it's done anyway. And no, they're not going to give it to us. All right, folks, I'm going to have to close up the room. I've got a doctor's appointment to head to. So we're going to shut down the room just a little bit early. If you are trading this afternoon, I could see the market still trying to rally a little bit higher here. So I would definitely be more bullish than bearish. But at the same time, it does look like we're getting a little bit of a sideways drift going on. So you're better off if you get a signal near the bottom end of this band, perhaps a red bar buy, something like this, a nice little red bar buy signal. That could very well be worthwhile taking. Okay, yeah, have yourselves a great weekend, and I will see you guys again on Monday. We'll talk to you then. Bye for now.